Hi, this is Mary Kopczynski, the CEO of RegAlytics, with your update on this week's 32,176 regulatory alerts. First, on a personal note, thank you to everyone who sent me happy birthday wishes. I had a really nice time visiting Washington State wine country, child-free, with my husband and best friend, and it was exactly the reset I needed. So now back to the one big beautiful bill. As you know, I'm going methodically through the table of contents and reading it from top to bottom. And this week I came across something called a COVID ERTC promoter, and I thought, what is that? So let's start with the basics. What is the Employee Retention Tax Credit, or ERTC? It was a credit that businesses could claim during the pandemic if they kept employees on payroll. If you own a business, like I do, you probably heard of it, and you probably worked with a provider like Layton, Alliant Group, Omega Accounting Solutions. There's a ton of them out there. And some of these providers also do R&D tax credit work, which is a bit more rigorous. So for example, I've gone through an R&D study where they interview my team, they document how we were innovating and tied specific costs back to new technology. And it was very, very detailed. But when it came to the ERTC, I think I did almost nothing. Someone basically clicked a button and poof, one day I got a huge chunk of cash. And at the time, it was an amazing lifesaver, as I'm sure it was for many small businesses during that time. So it sounds like in this particular section of the One Big Beautiful Bill, Congress is done with that kind of easy money, and they are cracking down on what they see as abuse. And so the topic of the week is, I'm going to say, COVID clawbacks, okay? So here's what the bill does for ERTCs. So if a company's primary revenue comes from filing ERTC claims and taking a percentage of the tax refund, they're now officially defined as COVID ERTC promoters. And that comes with strict new rules. So they now have to perform due diligence. They can't just take a client's word for eligibility. And if they make a mistake, the penalties are quite severe. The greater of $200,000 or 75% of the income they earned from that claim. And so that's Section 32101 of the bill. But ERTC promoters are not the only target. There are several other COVID-era clawbacks in the One Big Beautiful Bill. So let me give you a few examples. Section 32102 is the Employee Retention Credit Claims Audit Extension. So normally the IRS has 3 years to audit a refund, but for ERTC, Congress extended it to 5. So translation, if you got an ERTC check back in 2021, you could be audited all the way to 2026. And then Section 32111, termination of the COVID sick and family leave credits. During the pandemics, employers got refundable credits to cover paid leave. And some companies are still trying to amend old returns to get them, but the OBB cuts this off and started a statute of limitations for it. Section 32121, pandemic loan and grant recoupment. This one isn't a tax, but it directs Treasury and the SBA to go after improper PPP, EIDL, and restructuring right of revitalization funds, which means it's just straight up money for enforcement against fraud. But either way, the theme here is pretty clean, pretty clear. COVID is over, and Congress wants to take away things that cost too much. They thought it went out too fast and got in the wrong hands. And so that means that the free money is all gone, and we are in the era of audits, enforcement, and penalties. And that is it this week for RegAlytics. We have the global supply chain of the world's regulatory alerts in one very easy to use place. If you need a solution for anything related to regulation, give us a call.